Good morning. It's 9 a.m. here in Hong Kong, in Beijing, and in Shanghai. Welcome to Bloomberg Markets China Open. I'm David Ingles. Pleasure to have you all join us today. Let's get to your top stories today, shall we? Equities across the region. Well, this is a nuanced picture here. Some gains ahead of U.S. inflation numbers coming out. Investors awaiting, of course, fresh clues that could move the Fed outlook. New York Fed's John Williams saying rates are now sufficiently restrictive. Now, the SEC giving the green light to spot Bitcoin ETFs more than a decade after the first proposal, but warning it still does not approve or endorse the cryptocurrency. And China is fast losing its status as a must-have in global portfolios. But when you look at ETFs, though, seeing record inflows as investors shift away from actively managed funds. Right. Direct and straight to breaking news right now out of LG Electronics. They're now coming out with a specific number as far as CapEx and R&D, $7.6 billion. That's for the full year 2024. That's the guidance so far in terms of plans. That's according to a statement out of the company so far. So the company planning to more than double their CapEx investments alone from last year's figure, despite the economic uncertainties. That's according, of course, just more color there from the CEO, William Cho, who was speaking at the CES. Okay, so this is an interesting point to take note of the greater context of things, because we did have also the BOK decision coming out, and as expected, hold there. We'll be getting a lot of clues out of the Bank of Korea. So at some point this hour, we'll get you more in that statement out of the BOK. In the next hour, that's when they begin talking to the press as well. Expect them to get questions on when they think, or whether it's too early to start talking about lowering interest rates. Our folks at Bloomberg Economics think they'll need to start cutting by the third quarter of this year. That said, back to the here and now. A50 futures, you have U.S. futures, and we talked about this nuance within the equity markets. Most stocks are higher here. Nikkei continues this phenomenal run that we're seeing, in fact, on the Topics Index, and maybe on the Nikkei 225. We are, in fact, just nearing overbought territory. The Topics is certainly there. The opposite, though, is happening here in Hong Kong and MSCI China. In fact, up until today, we've yet to clock in a winning day on the Hang Seng Index. We'll see if that changes today. Coming up online is you have TSMC, of course, and that's within the Taiwan market. And at the close yesterday, the company coming out with sales negative 8.5% from last year. Currency markets, flip the boards, please, if we can. You have the Bank of Korea. We talked about that. I think 3.5%. is where the 7-day repo rate is at the moment. We've seen some pickup in the euro and also in cable, by the way, ahead of the CPI numbers coming out today. Dollar China right now is 717.75. We're now pushing towards this 50-day moving average. We're testing that. We just blew past a 200-day moving average a couple of days back here. 10-year yield, we're back above. We now have a 6 handle again here on a Japanese 10-year yield. And very, very quickly here, let's have a look at where we are on Bitcoin. Oil and iron ore has been in specific focus this week. And there we go. Dalian's down about 1%. In Singapore, the contract is extending losses. We're now clocking in a 7th day of losses there. Bitcoin better, 1.5%. We'll talk more about that in just a moment. Of course, the ETF overlay as it pertains to the cryptocurrency. Right. Now, ahead of the China Open, we talked about this a couple of seconds back. So we've had 0 up days so far. We've had 7 trading days so far in 2024, and not a single one has actually seen 2 specific benchmarks here, Hang Seng and the MSCI China, actually clock in a winning day. Does that change today? A lot of depends, of course, on trajectory. What happens with CPI? Will lower rates help? U.S. inflation numbers are coming through later today. A brief look at preview on core and also on headline. Median is 3.2 on headline, 3.8 in core CPI. You have a look at the highs and lows just to give you, I guess, an indication of what our parameters are as far as what would constitute a surprise. Looking at swaps markets right now, 6.5 cuts are priced this year. That's just about, if they start in March, that's effectively every meeting from March. We could plausibly get to 7 cuts priced assuming we don't get a nasty report, of course, out of that set of numbers later today. Joining us now to talk us through the Fed outlook, what it means for markets, given how far we've come, treasuries and equity markets. Isaac Poole joins us. He's Global CIO, PM at Oriana Financial Services. Isaac, we'll start with that. I mean, the Fed's told us three cuts. To be fair, they don't update their views daily like swaps and Fed fund futures. Do you think we're closer to 3? Or are we closer to 6 or even above 6 for the year?
I think we could see a total of 6 cuts or possibly more if later on in the year we see some big 50 basis point cuts. The real challenge the market's having here is that they're really starting to price in the probability of a cut in March. And the recent data that we've seen, the labour market data, likely the CPI tonight, the resilience or the stickiness of the economy that we've seen over the last few months just don't give a green light for the Fed to go ahead and cut in March. And I think that's where the market's going to get the biggest surprise over the next couple of weeks. But when we look out towards the end of 2024, I think we still could see 6 cuts, and it's just going to be that challenge the Fed has between the surgical precision of insurance rate cuts early versus the need to cut hard if we see a recession later in the year.
Yeah, and ironically, let's move to equities. Ironically, markets did position for 6 cuts on price. It doesn't look like we're prepared, though, or positioned for 6 cuts as far as what that indicates as far as the economic outlook is concerned. So I look at earnings right now, you look at valuations. Does it seem we're priced for a slowdown ahead?
I think that this big consensus view that we've seen of a soft landing becoming increasingly likely is what you're getting priced into equities. And that could be another point of contention or a risk to the downside for pricing. When we look through earnings, when you look at top-line growth at sales and revenue, that's been slowing really rapidly and putting downward pressure on earnings. And the only thing that's holding the earnings growth up at all really is margin expansion. And if we get through this first quarter and the economy is slowing as the Fed expects and intends, and I think everyone expects and intends, and the labour market is slowing and inflation is slowing, it's going to be hard for companies to continue to push margins wider and to hold on to those gains in their earnings. So that fundamentally suggests that we're probably seeing prices got ahead of themselves in the last part of last year and promises some challenging times through 2024.
And that translates to what? Do I sit this one out? If I'm sitting on cash right now, don't chase these gains?
Don't chase it. Don't get sucked into chasing a market that's near all-time highs at this point in the cycle. Yes, we might see it just sort of climb higher, and historically, you often see the market get back to its all-time high just before the Fed has to start cutting rates because the market is slowing and the economy is slowing. So right now, you wouldn't want to be chasing this. It's really an opportunity to lock away some gains, and they have been great gains through 2024. Where we had a bit of a rocky start in the first week of this year. But if we see just a little push higher, that's an opportunity to take those gains, recycle it into a slightly more defensive positioning at the start of this year. And if we do see a slowdown in the economy, a fundamental correction of 10 to 20%, you've got that opportunity then to move out of short-dated treasuries back into equities at a much better valuation.
Right. Okay. Well, on that point, we're back at 4%. Is that a buy? Is that a buying? Is this a window to buy treasuries right now, or do you see this correction going slightly longer?
I think you could see yields just extend themselves higher here, and it really gets to that point that the market is perhaps got a little ahead of themselves in pricing rate cuts, and so that will unwind, and you could see treasuries both at the short and longer end just climb back up towards that 4.5% or so.
Okay, where do you think we end the year, though, on the 10-year treasury? And while we're at it, of course, on the S&P, you sit this out, but do you think we'll end the year higher on equities?
I think you could still see equities higher, but not the 20% gains that we saw last year. You're looking at low single digits, and I think that could be a really bumpy round trip of down 20 to 30% and then back up if and when the Fed starts cutting. And as far as the 10-year Treasury goes, I think you're getting a low 3 handle there. We could see a big percentage point move lower at some stage over the next 6 or 9 months.
How do you feel? Let's pivot to China. How do you feel about this Chinese market, all things considered?
It's a strong economy. The economy is recovering, and there's been a lot of cumulative monetary and fiscal policy pushed through to the economy, and it's starting to show. You can see that in the activity data, but it is not being reflected in the equity market, and that is simply a function of reluctance from international investors to put capital to work in China because we still see those geopolitical tensions, and they are not dissipating this year. It's an election year in the US. There will be a hawkish rhetoric coming out of the US for most of this year. It's going to take some other catalyst to drag international investors back into China and really light a fire under those equities that are looking like they're reasonable valuations, but it's just not attracting the capital flows.
Isaac, we've covered the U.S., we've covered China. It's our first conversation of the year, sir. So anything else we've missed? What's top of mind for you? What else is top of mind?
I think when you look around the world at the moment, there's a lot of downside risks to the global economy. And if you were to look out towards Europe, where I think there's a consensus building that perhaps Europe could outperform this year after a challenging year last year, I think that's a place to enter with an extreme amount of caution. If the US slows, Europe will slow further. I think they could be in for a very difficult year, perhaps with a long, protracted recession. And that money that's sort of moving towards European equities at the moment could get burnt. I think it's still a matter of bunkering down, staying defensive.
On that fantastically bright note, Isaac Poole, thank you so much. Let's talk again. Global CIO, PM. At Oriana Financial Services. Right, just ahead, BofA Securities out with a report on China, a tripod strategy for a turbulent market. We'll unpack the 54-page report out of Winnie Wu and her team a bit later on. Before that, though, Vietnam's largest tech firm, FPT, is about to announce some major plans for expansion. Do catch our exclusive interview with the chairman. That comes up next, counting down to the open of trade. 18 minutes away, the opening bell here in Hong Kong, in Shenzhen and in Shanghai. Futures are flat. This is Bloomberg Markets China Open. Good morning. Welcome back. And, as you just saw there, of course, Taiwan elections are the big one this week. And really that is just a symptom, really, of the geopolitical tides that are permeating across markets, affecting companies across the world, thinking about how do you hedge geopolitical risk? How do you hedge supply chain exposure? In fact, one country that's really come up recently it has been Vietnam, popular destination for companies looking to diversify and hedge their supply chain and production exposure from China. And one of the firms that's in fact at the forefront of this trend is FPT. That's the largest tech firm in Vietnam. Joining us exclusively to talk through the company's plans is the company's chairman, Trong Ja Bin, joining us now to talk us through this. Good morning, sir, and thank you for coming on the show. I know you guys have a lot to announce and guidance as far as your plans outside Vietnam are concerned. But if it's okay, I want to start with what's going on inside Vietnam. And as we were just pointing out there, it's really been a magnet for FDI of late. It's not a new story that Vietnam's been a magnet for sort of low-tech production capacity, but it seems the government's pushing for something towards a higher value end of manufacturing chain. Why do you think Vietnam's in a good position to do that, number one, and why do you think FPT is at the forefront of that?
Yeah, I think Vietnam should be positioned as a new digital destination for investment and trading. How does happen? First is Vietnam is quite populations, about 100 million people. Vietnam stands for 10th on engineers graduations. Today, Vietnam has 1 million ICT engineers, and half of those are software engineers. Vietnam stands somehow second after India for software export. For last few years, Vietnam paid attention to digital transformations to build the digital government, digital economy, and digital society. And Vietnam have quite open. We have signed 16th new generation of FTA and going to sign another 3. And Vietnam also have strategic partnership with a lot of countries, and especially comprehensive strategic partnership with the US, China, Japan, Korea, etc. And thus make the kind of attractiveness of Vietnam, not for labor-intensive thing,
Right.
but
on that note, I'm reading the statement out of the Vietnamese government. Almost exactly this time last month, the government put a statement out that they're looking to build an AI semiconductor hub in Vietnam. They're talking, they say, to NVIDIA, who was part of that statement. I need to ask you directly: is your company in direct talks with NVIDIA on anything in Vietnam, and are you engaged with them in any way?
What do you mean with whom?
NVIDIA, the U.S. tech company NVIDIA.
Yes. Actually, Jensen Huang and his team to spend days in Vietnam. They met the government. They met the national innovation centers. He talked to startup companies, AI companies, and they also met the FPT. And we have very exciting talk. And we are going to set up a strong partnership with.
Could you tell us a little bit more? What specifically do you have planned with NVIDIA?
Yeah. I think first, it's a kind of mindset of FPT.
Okay.
World moving to digital transformations and also green transitions. That's 2 very important transformations. But Jensen said, and I totally agree, we enter new areas of intelligent transformations. That means from data, we get intelligence most valuable in future. That's about money, data to money. And in these terms, FPT invests to build to be the NVIDIA elite AI computing service providers, NCP. And hopefully in April, we will launch our first NCP in Vietnam. And we also plan with NVIDIA to launch another one in Japan. That's from the new infrastructures for AI computing. Another area is human resources. Jensen said if Vietnam convert from those millions ICT engineers to AI human resources, and then Vietnam should stand very high among the nations on this kind of transitions. And now we FPT also commit to build that kind of core teams, core competencies on NVIDIA technology. We recently, just a few weeks, we got ready 200 certificates from NVIDIA, and we plan to build another thousands in the first quarter of this year. And in totally, we would like to train 50,000 people in NVIDIA technology, and also another 5,000 for professional NVIDIA certified.
It sounds like you have exciting plans domestically, not to take away from what you're planning for your foreign business, international expansion. Can you talk to us a little bit more about your specific plans outside Vietnam? Because my understanding is, if my understanding is correct, you guys just clocked in $1 billion in overseas revenue a few days ago.
Yeah. Achieving 1 million. Our next target is 5 billion. Actually, for last years, we are doubling our revenues and also our profits after every 3 years. And therefore, we develop 3 critical points. First, in Japan, we have a big operation in Japan, about 3,000 staff there. Second, we have US. We have about 1,000 people over there, and Europe, the same. But also, we have a very strong position in Singapore. That's kind of, and in those markets, we grow, achieve the same speed, especially in Southeast Asia and Pacific Asia. We have more. We doubling our profit after 2 years. Yeah.
Understood. Okay, so you mentioned Japan and Singapore. Are there any other specific countries? You mentioned Southeast Asia that are central to your plan to hit $5 billion. And connected to that question as a final one, when exactly do you think your company will be able to hit $5 billion of overseas revenue? Can you give us a specific year?
That's 2030. We're working on that plan.
Right. And to the other part of the question, are there other specific countries you're looking to expand aggressively into? You mentioned Japan, you mentioned Singapore. What else?
Our position is the one major features of FPT is we speaking local languages in everywhere we're working on. We speak Japanese in Japan, Korean in Korea, etc. And because of language, we should provide the best service for managed service for multinational corporations. And we start to get this kind of order from the largest electronics company from Japan. And we're going to do that for other big guys. Today we have about 100 companies belong to top 500 Forbes. We also focus on automotive because we believe the car will be more software than hardware. And we're working on software-defined vehicle.
Ben, if I could just insert a final question. You have big plans. Do you plan on raising either debt or equity capital? Do you need money?
That's quite interesting questions. We invest. Every year we invest about hundreds millions in M&A. But answers your question. I think when we think about billions investment for NCP, for NVIDIA technology, super AI computing platform, and then, yeah, we need money at that time.
Dr. Trong, thank you so much for your time. Let's speak again. And have a great new year to you and your entire team at FPT there. Chairman of FPT, Dr. Trong Gia-bin, just talking us through their, confirming really their relationship and their plans with NVIDIA and, of course, their plans outside Vietnam. We're counting down to the open of trade in Hong Kong and in Shanghai and in Shenzhen. Futures are mixed. Plenty more ahead. This is Bloomberg. All right, here we go. So the Thursday session is just a couple of seconds away. In case you missed the big statistic earlier on, we've had 7 days, trading days so far in 2024. Not a single day has the Hang Seng Index nor the MSCI China closed higher in 2024. So it's been a challenging start to the year. As they say, onward and upward. It gets more challenging from here. Now, as far as other things to track today, so we are still on stimulus watch. You look at everything from this, I think it's a 9-week or 7-week rally in CGBs. That's number one. You look at some of the positioning around dollar China, for example. We breached I think we're now testing the 50-day moving average. We breached 20 days. Sorry, I'm just racking my brain here. You had a very strong fix at the PBOC coming in and anchoring the currency a little bit more today. You're seeing that reaction, of course, come through in the currency markets. And we are also in the window for two things, FDI and also December credit numbers out of China. Okay, now, a couple of other things to track. There's some big movers, and let's flip the boards, please, if we can, because I'm just going to update you guys here, some lines here out of Wuxi Biologics, and I'm going to just wing this because these are literally just dropping as I speak here. So Wuxi Biologics and Wuxi Aptech. Okay, I'm just bringing up my screen separately. So Wuxi Bio is up as much as 16% in the early goings. The company's coming out with some solid growth guidance. We'll talk more about its guidance in just a moment there. That's number one. Now, Wuxi Aptech is also up about 8%. There we go on your screens. It's actually out with some guidance as well. It's confident it could achieve 2 to 3 single digits, to be more specific here, 2 to 3% revenue growth in 2023. Free cash flow, expecting that to exceed 4.5 billion, and their profit guidance to exceed 10 billion renminbi for the very first time. Stocks are reacting. Let's see, though, how long this lasts here. Flip the boards, please, if we can. I think we already talked about this. Let's look at some of the changes to some analyst actions here. So CLSA out yesterday, cut Heidi Lau to reduce. Baidu is a move out of Macquarie. Great Wall Motor is out of Jefferies, if I remember correctly. And Win Macau, I think it's a city call. Huatai Research, my mistake. There we go. Race to buy at Huatai, 950 a pop. Okay, where do you find alpha in this market? Maybe it's property. If you look at one fund manager that managed to outperform just about every single one so far, they say that market has bottomed right now, saying investors who wait actually too long to find the bottom might actually miss out on the rebound. Let's bring in Tanya Chen, of course, our FX and rates reporter, who has the story for us. You've talked to them, right?
Yes.
Who's the fund manager?
It's Matt Egan at Loomis Sales.
Okay.
He's Boston-based. Actually, late 2022, he spoke to Bloomberg, and he told us then that the new property measures then were a game changer, right? But what's particularly interesting now is he's come back, about a year later, and he acknowledges that he had the timing on the bet wrong. He actually was buying Sunak bonds before they restructured. But now he's actually saying he's buying more post-restructuring, and he's starting to see kind of, the sentiment is really kind of very, very deeply entrenched at this point. But this is kind of the time to buy. There's two things he's looking at. Obviously, the Fed pivot, there's obviously a little bit more appetite to take on risk now. But the second part of this is also just the China property measures. He doesn't think that China's going to let this sector, go down. And so you kind of want to be positioned there when the upside comes back.
And it seems that he's still fairly contrarian in this one. This is non-consensus still. Like, what is sentiment like, broadly speaking, outside of Matt?
Yeah, I mean, I think what's interesting about, reporting on this story was that actually we had heard from Fidelity, who was also kind of building a small position in China property stock names. And that was why it was kind of catching our interest here, because these are both very kind of contrarian views on the broader sentiment. I think 10 Wall Street banks were saying that China property slump is going to continue for the next year, right? Goldman and Morgan Stanley. But Fidelity, they're also of the view that these housing cycles usually take maybe roughly 10 years, comparatively speaking to other developed markets. China's could bounce back much faster. And so Fidelity is actually put in a position in one of their smaller multi-asset funds on Long 4. I think they have a couple of other names kind of scattered. But I mean, you just saw in the last week, Vanke, Long 4, these guys are already kind of, they're also showing they're coming out and showing repayment plans. So I think there is a little bit of kind of green shoots starting to appear.
Tanya, fantastic story.
Thanks.
Tanya Chen there, our FX and rates reporter. Now, let's get a view from BofA. Why not? Maybe let's start with that. What Tanya mentioned. Winnie Wu's here with us, China equity strategist. How do you feel about properties? It feels like maybe you're not convinced just yet. I'm looking at your 54-page report here.
Yeah. So for property, I think the impact on the economy or market, there are three fronts.
Yeah.
Right. Number one, last year market was worried about downward spiral, hard landing, leading to shadow banking blow up and a broader financial systematic risk. I think on that worst case scenario, the downside is quite contained with the easing measures, with government came out to defend Vanke in November last year. But there's the second and third issue. The second issue is the drag on economic activities, on commodity demand. And that's a factor of property-related construction activities. If we look at the activities in the past 2-3 years, new home sales and new starts already plummeted. Right? By last year, new project starts is back to 2006, 2007 levels only. However, in terms of the construction activity, that's lagging the new starts. Right? So the weak new starts in the past 2 years will continue to build on to the weakness of construction activity this year, which is a drag to commodity demand, to economic activity. So that is still a negative for this year. And the final piece is about the impact on household confidence, on wealth effect, right? And that's a factor of the property prices, right? What do people think of that? Unfortunately, for now, we haven't seen any turnaround. But on the property price side, I think there's is one area government policy can do more, right? They can inject more confidence. They can potentially give a bit more flexibility, room for, some asset price bubble, even to some extent here and there, to reignite the animal spirit.
Yeah, so since you mentioned construction, I noticed in your model portfolio that still is part of your underweight list.
Yes.
So what's the overweight list, what's the underweight list, and what does that model portfolio look like?
Yeah, generally sector level, we are cautious on the material-related sectors, so metal mining excluding gold, construction materials, and the chemicals, paper. We are also more cautious on some of the consumption-related names, right? Food, apparel, footwear, and we cautious on insurance, which saw very bad earnings downgrade in the past few months. On the other side, for the more positive list, we still like some of the large internet sectors. They at least have some good bottom line earnings growth, and some of them are having this ex-China going global story, whether it's in e-commerce or in the gaming industry. We also like the defensive names like coal and gold, but we also like some subsectors within healthcare like pharma and biotech.
Okay, you opened up a lot of doors there. You mentioned earnings. Do you think these earnings projections for the year make sense, or do we get another round of... You're smiling, okay.
So when we look at the consensus earning forecast, somehow there's a magic number of 14-15%.
It's always that, isn't it?
Yeah, it's always that. So January this year, we again, sell-side is looking at 14% earning forecast for 2024. We think realistically it's more like to be like low single digit, maybe 2-3%. So unfortunately, this year we're still seeing earnings risk.
Okay, the play last year that worked out, a couple of things, right? Shanghai Comp did not do as badly as others because of the weighting of SOEs.
Yep.
Is SOE still a big play? And if it's still a play, is it still dividend yields as far as that's concerned?
Yeah. Definitely.
Okay.
Shanghai composition 60% are SOEs, whereas MSI China is only like 30-something%. So Shanghai Comp outperformed largely because these large SOE stocks, right, banks, energy, utility, telcos, did much better than the rest of the market. And I think in this year, when we're looking at L shape for the economy, credit growth.
Here we go again with the L-shaped recovery.
and potentially market, right? Then, 8-9% dividend yield is actually very, very important and attractive.
Yeah. What do you think about the green energy sectors? So whether that's your batteries, your EVs, which you would know, the last 5 years has seen tremendous growth, but we've started to see signs of maturity, right? Margins are getting squeezed. Looks like there are too many players out there.
Absolutely.
What does that next 24-month window look like for that trade?
Yeah, so, the best time was like 2021, 2022, right? Those were the times when new EV sales were like, over 100%. But last year, we already started to see significant slowdown in EV battery, and overcapacity in the renewable energy related sector. Positioning wise, those were also quite crowded along by global investors for ESG reasons, for aligned with China policy direction perspective. And so position flow selling was another very big drag to the renewable energy related sector last year. This, and actually for the next 2-3 years, we still see continued deceleration of new EV battery supply chain to probably single digit by 2025, 2026, which means it's no longer an industry-wide, good sector to buy, but you need to be very selective in terms of stock picking the stocks that can gain market share, can, expand overseas to defend their margin to some extent.
Okay, so this is the globalization of the
That's
Chinese
right.
brand. Final question, another theme is the localization, import substitution.
Yeah.
So what are those local brands that you think, local companies that you think might actually benefit from this look inward?
Yeah, so localization is mainly in like industrial automation and tech, whether it's hardware, semis, or software-related sectors. Many of them are Asia mid-small cap companies. This localization trend is still very important, and to some extent, that's the key on whether China can find the new growth driver to be successful in the AI era in the next 5-10 years. Yeah.
There we go, 54-page report. Did you read everything on the 54 pages?
I write everything.
Oh, there we go. Happy New Year to you and your team. China equity strategist at BofA Securities. As we were having that conversation, the Bank of Korea, the statement or the details on the statement are out. So in case you missed it, they kept rates at 3.5%. That's your headline figure. The BOK has removed the need to raise the base rate further from the statement. So it does seem to that point they're implying that rates are already in restrictive territory, that maybe the last hike was the last one. Some guidance on inflation will likely continue to fluctuate at around 3% for some time. Core inflation forecasts remain towards a modest slowdown, and that the property project finance risks have actually increased. So that's actually a story that hasn't gotten as much attention as I think it should. The looming financial stress and signs of it within the property sector in the South Korean economy, which might actually push the Bank of Korea, we'll see what they say in their press briefing in the next hour, how that actually is affecting their thinking of when they think it's appropriate to then enter an easing stance. For the meantime, 3.5%, that's where we are, and that is sufficiently restrictive at this point in time for a longer period. Okay, we got through a lot there. Plenty more ahead then. This is Bloomberg. All right, let's talk, this Bitcoin, shall we? Big in the news, of course. And finally, we're here. Approval is out following the drama that we had on Wednesday. We're closer to about 47. You got to wonder whether a lot of this has been priced. Given this has been a conversation, at least on the ETF front, running for several months, if not 10 years, if you measure it from the first time. I think the idea was floated by the Winklevoss twins, of course, about 10 years ago. But anyway, we're here. Approval's out, and you have, I think, 11 ETFs have now been stamped to hit the ground running. Let's get a sense of what the SEC had to say, of course, as they begin on Thursday. Have a look.
I'm delighted that we're at the end of this saga. I know there's still pieces of it to go, but I think this is a big milestone.
Rebecca Sin, she's with us here on set to talk us through these 11 ETFs approved by the SEC today and the differences between them, because 11 is a lot.
11 is definitely a lot. It's a record for global ETF launches. We've never seen 11 ETF launch at the same time. But one of the questions is, what is the difference between them?
Yep.
From an underlying perspective, they are all tracking spot Bitcoin. But what we're going to see the difference is really in assets under management. How much do we think how much are they going to get? And how much flows and trading volumes are we going to get today? And that's what everyone is watching. From assets under management, we expect more than 30 billion of assets to come in. And this is largely due to Grayscale's Bitcoin trust that has $28 billion in assets. We've heard that BlackRock has secured $2 billion in assets, and we expect everyone else to have at least a couple $100 million. And so that's why we're saying $30 billion. The main difference, though, between all of these is how much assets do they have, what's their trading volume, and they've all picked different custodians. So the main custodian that they have is Coinbase, but for instance, Fidelity has obviously picked Fidelity as their own custodian, but VanEck has picked Gemini, and Hashtag has picked BitGo. And so there are different custodians, and there are different trading partners. So the authorized participants are Jane Street, Virtu, ABN AMRO. So there are going to be difference in pricing and where the spreads are trading at. But we expect that it's going to be pretty competitive, but we're going to see a huge drop in trading volume across all 11 ETFs.
Something to look ahead to, of course, at the Thursday Open. I can't let you go without asking you about China because, I mean, this market's not done very well, let's put it that way, right? We've seen foreign investors largely stay away. We've seen outflows. But in terms of ETFs, which is your wheelhouse, of course, we've seen a record amount come in. Why is that, and does that continue?
So one of the things to make note is that last year in onshore mainland China, they saw a record of 77 billion inflows. And so this is a significant amount. To put this into perspective, in 2021, they only had 8 billion. And so one of the reasons why we've seen huge inflows in onshore Chinese ETF is ultimately from the CSRC. They've made a big push to help promote ETFs. So for instance, last year, they've reduced their approval time from 6 months to 3 months. And some of the standard indices can be approved as quickly as 2 weeks. But we've also seen a huge change in who is buying ETFs in mainland China. And so historically it was mainly all retail buying, but now we're starting to see more institutions participate in this. And so for instance now, roughly 75% of the market is allocated to retail investors, and we have 25% coming from institutions. And these are really the national teams like the Central Huajin, Ping An that are buying ETFs. And we really saw that at the end of Q4 last year. But I think what's also helped is the performance of how active mutual funds have done in China. So active mutual funds have significantly lagged their benchmark, and they charge more. And so last year, 60% of the mutual funds lagged the CSI 300. Historically, it was only 40%. And so I think because of the performance and how much fees mutual funds charge, we're seeing people shift from mutual funds to ETFs.
Do you think the trend continues, that mutual funds better be on alert?
I think this trend is going to continue because as we've seen globally, even in the U.S., we've seen a huge shift from mutual funds to ETFs. And if we bring this back to even the Bitcoin ETF that's launching, fee compression, 6 of these Bitcoin ETFs are offering it for free. And so fee compression is definitely a thing that investors are considering. And I think in mainland China, we're going to continue to see the shift from mutual funds to ETFs.
Rebecca Sin, out of Bloomberg Intelligence, our ETF analyst. Thank you, by the way. All right, there's more, of course, coming up on this SEC Bitcoin decision. We'll be speaking with Ballet founder and CEO Bobby Lee joins us in just over an hour from now. What it will really do to change the crypto conversation. So at those times, on your screens, plenty more ahead. This is Bloomberg. Now, as Taiwanese voters head to the polls this Saturday to pick their next president, one of the largest players in the island's $1.1 trillion life insurance industry is optimistic about the outlook for the business. Nanshan Life Insurance Chairman Chung Yao Yin spoke exclusively to us about the sector's prospects.
We can now offer a full range of products, and that is certainly very helpful because our customer certainly has the needs for investment-linked products. Right. So I think by offering that range of products, it will certainly help with our market share.
It's been a tough couple of years with the interest rate cycle in the United States and the hikes for particularly Taiwan insurers. What's your outlook for 2024?
I think my outlook is positive. I think I have a very positive outlook for the 2024. We believe that Fed will have to cut rates, and that would help certainly the insurance sales. Because in a higher interest rate environment, it's a lot more difficult to sell insurance product because the comparative yield they can get from other products.
So what kind of premium increases can you expect in addition to the improved interest rate environment?
We don't actually have an exact number, but we're looking at a good increase.
Do you think the worst is over for this interest rate risk? I was seeing a note from Fitch earlier this month essentially saying this is still going to be the biggest risk to the Taiwan insurance industry.
Well, I wish that it's over. It's never, it's difficult to really pin down whether the situation is over, whether we can really completely get over this high interest rate environment.
There's been talk about in the past, whether it was back in 2009, but I think you also applied for an IPO in 2018, which financial regulators rejected. I think some of the ratio to equity was not, you didn't meet that requirement of 5.5%. Are you revisiting the opportunity to potentially have an IPO?
Well, capital injection is certainly an issue that we have closely looked at. Last year we have issued sub-debts, which would help capital. But certainly our goal is to go IPO. It's on our agenda. But at the moment we don't have an exact timetable for that.
Is the market looking better, though? I mean, we've seen since the end of 2022, the TAIEX is up about, 24%, and the economy seems to have a little bit of a tailwind right now. Is that your assessment right now?
Yep. I think if you look at last year, especially the fourth quarter of last year, Taiwan's export economy is doing really, really well. And the YOY growth was really exceeding everyone's expectation. So I'm looking at this year also with a positive outlook. I think that Taiwan's economy will do good.
And I know we're not talking politics today, but right now, obviously, politics is at the fore with the presidential election coming up. So I'm not going to ask you about that. But the offshoot to that question is, what kind of support from any government, whichever is going to take office, what would you like to see to help the insurance industry here?
Well, really, the elephant in the room is really IFRS 17 ICS and the new capital regime especially. And I think we, as an insurance company, the whole industry actually have some really specific history, special to Taiwan. And I think the local regulator, the financial regulator really working hard with us, and they want to make sure that's a smooth transition to the new regime. And then the chairman of the FCC has made it very clear that the whole regime is for everyone's good, and then it's not to disrupt anyone's operation. So I think that was a very good, important promise that we have, and we believe that the financial regulator would really help us to transition into a new regime and to make it a more viable operation.
All right, conversation there exclusive with our colleague Stephen Ingles. We have the special, of course, coming on under the elections, and ahead of that, some fairly important lines coming out of Taiwan. This is out of Ho Yue, out of the KMT, laying out the parameters of their engagement that they perhaps see with the U.S. and also China, that the DPP is incapable of de-escalating tensions. They will be increasing their purchases and ties with the U.S., and they will not discuss unification during any potential tenure. The status quo has shifted under the DPP, and Taiwan is at the brink of war, according to them. This is Bloomberg.